First of all, on what you return to shareholders, is it buybacks or dividends?
No, what our results that we announced today has very strong broad-based growth in sales and profits and cash flow. And what we've guided to for the next 3 years is the company will perform sales growth in the mid-single digits, profit growth ahead of that. And we are returning capital to shareholders of £4.5 billion over the next 3 years, up to 4.5. And that is in addition to our dividends, which grow nicely in mid-single digits every year.
Mr. Menezes, growth was a little bit short of expectations, but product innovation and increased investments seem to be paying off. Which are the brands that you're feeling most upbeat about for the upcoming year?
We're very happy with the growth we've delivered this year at 6.1% sales growth and profit growth at 9%. If you look across the world, all of our regions are in growth. I'm really happy with North America growing 5%. The Europe region grew at 4%, Asia and Latin America 9%, Africa 7%. Our Scotch whisky business grew 6%, Johnnie Walker grew 7%. Our reserve brands, which are our higher end brands, grew 11%. Gin and tequila both growing north of 20%. We've got good momentum, and it's consistency that I'm looking for in terms of maintaining that quality mid-single digit growth. And we've also had a banner year with new product innovation that's done very well across the world.
Which categories are you most interested in acquiring targets in?
We have a very well-balanced portfolio today, both in terms of categories and brands and geographic footprint. And our interest would be in acquiring brands at the premium end of the market that have good growth potential. We recently acquired Casamigos Tequila, and that brand is doing extremely well. I'm really happy with that acquisition. We're also backing young entrepreneurs. We've got about 25 investments in a number of brands in various categories, in whiskey, in aperitifs, in non-alcoholics. So Diageo wants to be active in acquiring brands, but brands that have good long-term growth potential. We don't really have significant category gaps. I feel good about the portfolio today.
How are you approaching the cannabis market beyond simply studying it?
No, it's the very early stage of development where we're studying it. And we are not seeing an impact on our business in the states where it's legalized in North America. And the key thing we want to ensure is that there's a strong regulatory framework around the category, much like we have in alcohol. But we're just watching it and studying it right now.
Mr. Menezes, how worried are you that the chances of a no-deal Brexit have increased with Boris Johnson as Prime Minister, given the cabinet that he's formed? And of course, you can't move a lot of your supply chain for a lot of the things, including Scotch.
Yes, whatever happens in the world, we're committed to Scotland. We'll be making Scotch whisky there. A few things for Diageo. We can handle, and obviously we're planning for it, the various scenarios of Brexit. We can take in our stride. And this is for a few reasons. One is our supply chain is simpler and more indigenous. We have barley, wheat, peat, women, men, and thyme to make Scotch whisky, most of which is indigenous to the country. The second thing is we can trade within the EU under WTO conditions, tariff-free. And then as it relates to other markets, the UK government has been making good progress where some of the EU FTA agreements with markets where Scotch benefits, we feel confident we'll be able to get the same conditions for the UK. So we clearly want a deal to happen, but our company has the ability to work through the various scenarios perhaps better than some other manufacturing sectors.